Hey guys, Brian Horton again, professional trader, owner, and educator at BK Trading Academy. And this is our first ever 30-day trade challenge. So if you are part of our YouTube community, yes, if you're watching this video, I want you to participate because this trade challenge is going to make you stronger. 30 days. This is like a workout plan. If you work out consistently, if you eat right consistently for 30 days, it will get you that much closer to your goal, except this is for trading. So we're going to do this together, you and I together with this 30-day trade challenge. So I'm going to give you 4 steps to follow. We're going to use the comment section below to hold each other accountable. Don't take this lightly, guys. I'm going to take it really, really slow with you. And I hope that you really take this serious. I hope that you participate and I hope that you comment because there's going to be some benefits of you commenting on this video. And I'll show you later on what that looks like in the video. So let's go ahead and get right into it.
Yeah, I know I got problems and I don't know where to go. I don't want to put the blame.
All right, guys. So step 1 to our 30-day trade challenge. We're going to do this together. We're going to pick only one Forex pair for the entire duration of this 30-day trade challenge, one pair. And I know that this is slow. I can easily say, okay, maybe 2 or 3 pairs, but this is going to be slow, okay? One pair, and we're going to analyze that pair and mark it up, and we're only focusing on that one pair. And the reason why is because it will help you to predict what price is going to do. We're going to cancel all of that noise with all of these other pairs, pick only one pair that you're going to focus on. Now, a key of advice, I suggest that you pick a pair that is relative to where you live at and also what trading session you're going to be trading often. So, for example, I'm in the US, so I will possibly pick USD CAD, right? Because I like to trade the New York session. The US dollar is more volatile during that session. So I'm going to pick USD CAD, for example. Okay. So I want you guys to do that. Depending on the trading session that you're going to be trading and the currency based on where you live, I want you to pick that. Okay. I'm going to show you a list of sessions right here that you can pick in the time frame. So you'll just have to determine your local time and where you're going to be trading that. It's going to help you because that pair is typically more volatile during that trading session and you will get the most bang for your buck when you're trading and analyzing this pair. Okay. So part of the step 1 here is we're going to only mark up our charts using trend lines on the higher time frame. We're going to do the daily time frame, do a trend line, and then we're going to clone that trend line, take it to the opposite end, and we're going to trap price because we're going to predict where price is going to go. Along with that channel, we're going to mark our key levels. Now, oftentimes people struggle finding key levels, so I'm going to give you a hint. Look where you see price has pointed to and reversed in the opposite way abruptly, okay? That will be a key level. You can also spot multiple wicks. If you find wicks pointing at the same area or a whole bunch of candles in that same area, mark that as a key level. I'm going to show you really quickly. All right, so also with step number 1, I want you to pick at least a minimum of 3 days a week, okay? You have to trade at least 3 days a week. If you can't do that, don't participate in this challenge. The reason why is because consistency is key, just like working out. You want to be consistent as possible. And if you can do at least 3 days a week, trade 3 days a week, at least a minimum of 30 minutes for that day, then it will help you a lot. You can actually mark your chart up. Price will start to become predictable. And also what we're going to do is look at that pair and look at the past and see how price moved. So you're going to really look at that pair. You're going to analyze it. Just scroll back in time a little bit and look and see if it was an uptrend or a downtrend on the daily time frame. And then look to see when it reversed from an uptrend. Now it's headed down, or it was downtrend. Now it's headed up. This will help you to determine what's going to happen next, possibly in the next few months or weeks or even days. So just get comfortable with that. Each and every day that you're trading, sit there and just look at price move. Don't do anything. Don't be tempted to trade. Don't demo trade. Don't do anything. Just mark your charts up with that channel, like I mentioned. Sit back and just look at how price moves for at least 30 minutes a day. If you can be disciplined enough to do that, I'm telling you, it will take your trading to the next level. We're doing this so that we can get used to the price movement of this pair and nothing else. Don't be tempted to look at any other pairs. This is going to be for 30 days. And I guarantee you guys, if you can do this for 30 days, for a minimum of 3 days a week, if you have more time, you can do 4 or 5 days a week. It will take your trading to the next level, but you have to be consistent. Don't skip week 2. Don't skip week 3. Just go all the way from day 1 to day 30. All right, let's go to step 2. So step 2 is forexfactory.com. Forexfactory.com is what Kenya and I use to get our economic news for our trades, for the markets, for the pairs. All right. So we're specifically going to look at forexfactory.com, and no, we're not sponsored by them. This is a site that is pretty reliable. Okay, so we're only looking for red and orange folders. Red means high impact news, orange means medium impact news, and this can change the way you trade. A lot of times people don't even understand that news can affect the market. So when they enter the market and then all of a sudden they see price shoot up to the upside and they're like, why is it shooting to the upside? I'm at resistance. Is because they possibly forgot to look at the news, and that news was good for that currency. So go to forexfactory.com, and based on the currency pair that you're trading, look to only find to see if that currency is impacted with that news. So for example, if you're trading the euro, you only want to look for red and orange folders that is going to impact the euro. If you're trading NZD, which is the New Zealand dollar, you only want to look for red and orange folders that's going to impact the New Zealand dollar. Only look for currencies that is impacting the pair that you're trading. So this is building that tolerance, right? This is building something that is going to stick with you for a lifetime. You always want to check the news before you even enter or consider entering any trade. And this is building a habit that will be with you for a lifetime. Now, you may not even trade news, and that's completely fine. But as long as you're looking and you know that there's news that may impact your currency pair, you can stay out. You can make that decision to stay out. Or you may even trade the news. So whatever the news is, you want to see if it was good for that currency or not. If it was good for that currency, you want to see how many pips did it gain when that news happened, or you want to see how many pips did it short when that news happened. Then you want to see when price was more volatile during that currency pair that you were trading. So for example, you will notice that on Tuesday, there are specific pairs that are more volatile than it is on another pair, or Wednesday or Thursday. So I want to give you that little tidbit there. Also, just a pro tip, Mondays are typically the slowest and Fridays are typically the slowest as well, because that's when price is starting to regain some momentum from the weekend. And then also on Friday, this is when the market begins to close. So you'll notice that the volatility slows down a bit. So just a pro tip for you guys. All right, guys. So at the beginning of week 2, I want you guys to now mark your key levels. Okay. So we already talked about drawing our trend lines and our channels. I want you to mark your key levels. And I talked about marking your key levels before. So just look for price that stands out. You want to mark your support and your resistance level off of the daily time frame. Why the daily time frame? Because it gives us the overall trend. Also, I want you guys to only focus on trading with the trend. Now, you can counter trend trade, but I want to teach you good and new habits. Trading with the trend reduces your risk significantly because, for example, in an uptrend, you're going to have more green candles pushing up than you have red candles pulling back. So even if you get a bad entry, 9 times out of 10, price will reverse and go your way if you hold on to that trade just a little bit longer. So mark your key levels and remember to look at Forex Factory so that you know if something happens, if there's a huge spike in volatility, you know it's because of that news. So again, that's all you're doing for week 2. You're still not entering trades. You're not doing anything. You're still learning this pair and you're just marking your levels and understanding price. Just be patient, take notes. And I should have mentioned in the beginning of this video to get a journal. Because day 1, I want you to mark what you've seen. Day 2, I want you to mark what you've seen. Day 3, so on and so forth, and just take notes and be very, very observant of this pair. That's all you're doing. You're just observing, just like a relationship. You want to observe. You want to learn that person. You want to learn that pair. You want to get to know it. You want to understand its movement. You want to see if it's a pair that fits your personality or not. You may discover that this pair isn't for you, or you may discover that this pair is great for you. But just take your time and don't look at anything else but this pair. All right, guys. So at the beginning of week 3, we're going to mark our stop losses. Okay. Stop losses is a part of risk management. You want to have that in place. Okay. So you always want to mark your stop losses outside of structure. So that means that if you have a support and resistance zone, you want to have it outside of that support and resistance zone. You don't want to have it a little bit outside of the support and resistance zone. You want to have it at a significant level. So for example, maybe 50 pips away, because oftentimes these people who move the markets like to wick people's stop loss, and then they would move it the opposite way. So make sure it's out of structure. If you have a trend line, make sure your stop loss is outside of that trend line, outside of the resistance and support zone. And a pro tip for you guys, you can widen your stop loss if you minimize your lot size. So for example, if I'm trading 10 cents or 20 cents a pip, then I have more room to widen my stop loss. Now, this only works if you get in at the best possible price. That's why I want you guys to mark your levels, because your levels are price that banks and institutions and hedge funds are more likely to feed off of. So make sure that you have a nice wide stop loss, get in at the best possible level. That's why you're marking up your charts, and then enter at a low lot size, because now your risks are minimal. We always tell our students to risk no more than 2% of their entire account when they enter a trade. All right, guys. So if you stuck with me this far, this tells me that you're a very serious trader. I'm sure that there is going to be a lot of people who didn't go this far for one reason or another, but this tells me that you're serious. So for the next 48 hours, for those who comment the pair you're going to be focusing on for the next 30 days, also tell me how long you've been trading, along with what is your primary goal when you become a successful trader. I will respond to you and give you my outlook on the particular pair that you're looking for. I may even be encouraged to do an analysis video, which can help skyrocket your 30-day challenge, which will overall help skyrocket your trading abilities. So again, I will reply to you personally, analyzing your pair, just kind of giving you my thoughts of what I think of the pair. And then we can possibly even engage. I would focus only on you if you can respond within the next 48 hours, only on you answering some questions that you may have on that pair, how you mark that chart up, and I will become your personal mentor for this particular pair for this 30-day challenge. That tells me that you're serious, and I don't mind spending my extra time coaching you through this particular pair for this entire 30 days. So just remember to come back to this video. We'll converse back and forth about your challenge, where you're at, and how you're doing with this pair, my outlook on this pair versus your outlook, and we'll just play it all together so that you can become a profitable trader. So that leads me to number 4. The beginning of number 4, I want you guys to put it all together. Look at the charts that you marked up. Sometimes you may have to adjust your trend line. You may have to adjust your levels, and that's completely fine because the market will throw us a curveball every now and then. You've made it to week 4, okay? So analyze it. Analyze your stop loss. We're still not taking a trade, but I want you to analyze your stop loss. I want you to analyze your entry levels. And then I want you to demo trade this pair based on what we talked about. So remember, your channels, you're going to only trade with the trend. So that means if you're in an uptrend, you're only looking to buy at a support level. Okay. So make sure you mark your support and resistance levels. You want to wait for price to get to that support level, maybe close to the bottom of the trend line if you're in an uptrend, and then buy. If you're in a downtrend, you only want to sell because it minimizes your risk. So you're going to sell at resistance level. If it's at the top of the trend, then you want to sell and make sure you mark your levels. Okay. So you're only going to demo this trade on week 4. Now that's a disciplined trader. You're not going to be tempted on week 1, 2, or 3. You're going to execute all of this on week 4. Again, every single day, take a look at forexfactory.com, because even though a trade may look really good, if there's news pertaining to that particular currency pair, it may go the opposite way. So again, remember to build that habit of going to forexfactory.com, guys, before you enter any trade, guys. So again, guys, 30-day trade challenge for YouTube that I'm going to participate with you. I'm going to look at USD CAD. It's not my favorite pair, but I usually trade the New York session, and I'm going to take a look at it, guys. And if you guys want an update on that, I'll show you the update. And again, guys, if you stuck this far, give me the pair that you're trading in the comment section. Also give me how long you've been trading, along with what are your plans once you become a profitable trader. And I will work with you one-on-one in the comment section of this video. And I will see you guys in the next video. Like, subscribe if you haven't already. We're here to make you better, make you profitable traders, guys. Everything is in the description below if you want to become a part of our community. I hope you do. And I will see you in the next video. God bless you.
I know, something's got to change. When I was low,